Trading is all about decision making. Your rate of success when it comes to trading, whether forex, crypto, or stock, totally depends on how well you can make the right decisions and the wrong decisions when it comes to trading. And it's so unfortunate that a lot of we beginners, when we get started with trading, we always get stuck at the dumb decisions that we keep taking over and over again. That stop us from actually getting to the success margin. That's why in this video, I'm going to share with you top 4 dumbest decisions that we take as traders that actually hold us back. And if you really want to grow as a trader and really become successful as a forex or crypto trader, I would advise to watch this video to the very end and take note of these 4 silly decisions that we keep making over and over again that keeps us behind. So this is your first time here. Hello guys, welcome to my channel and welcome to Forex Trade. On this channel, I mainly focus on how you and I can actually make money trading the crypto, forex, and stock market. So this already said, help me do the YouTube business by smashing that subscribe button. And without taking much of your time, let's get straight. Let me share with you these 4 dumbest ideas that you need to avoid as a trader today if you really wanted to become profitable for the long run. Dumbest idea number 1 is simply over risking in the name of having A+ setup. Now, I see a lot of you traders believe in the idea that there's something called an A+ setup, which is a setup that has, like, there's a higher chance of you actually winning that trade. So you end up actually over risking whenever you're taking such trade. Now, this is one of the dumbest things that I've heard a lot of you traders implement. And I think not just, even a lot of big time traders still do this till today. And I would advise you as a beginner who really wants to grow as a trader and be on a profit forefront that you should avoid such ideas. When you are taking a trade, have a fixed risk. And to me, I always advise that you risk something below 5% of your account. So highest you should go is 5% of your total account and below. And the reason for this is simply because if you are able to maintain a 5% and below risk, there's always chance for you to come back into the market whenever you make a loss. But then I see a lot of you enter a trade and they probably use your whole account size as stop loss, and you might not even set stop loss position. You just take a very huge lot size and thinking you want to flip your account over in split seconds. Now, this is one of the dumbest things you can ever do out there as a trader, and this is one of the reasons why a lot of you traders aren't profitable till today. It's not because you don't have a good strategy. It's not because you don't have good trading principles. It's simply because you are over risking, which is not necessary. So if you are a trader who is stuck in the idea that there's what you call A+ setup, so in such setup you should take excess risk, our advice to actually avoid that idea. That's why I always advise that as a trader, you should have a strategy that is well back tested and approved, and that strategy should have its risk management approach to actually help you hit the success margin. Now, this is the first dumbest idea on my list that you should avoid as a trader, simply believing that there's an A+ setup. You should have only one setup as a trader that you personally trade. You don't have to trade every single. So when you have a single setup, then you'll be able to key the idea of this one is an A+ setup, this one is not an A+ setup. Because if this is an A+ setup and this is not an A+ setup, why are you taking this one and they're not taking this one? So this one will actually keep you in the middle, and I think this is one thing a lot of you traders suffer with a lot. So now that is simply the first dumbest idea on my list. Simply key the idea of this an A+ setup. So let me take this one with huge margin and then ignore this one. Dumbest idea number 2 that you should avoid as a trader is simply the idea of buying the dip and selling the highs. So now, how did I even come up with the conclusion that this is a very dumb idea? So recently, we all know that gold has been riding on an all-time high recently. And I see a lot of people trying to short the all-time highs on gold. And every day they keep hitting stop loss, and every day they keep trying. Now, this is one thing that a lot of you traders actually do a lot. Like if you are watching this video right now, you've done it before. And personally, I have done it before. I'm fond of selling the highs a lot back then. Now, the truth is that when the market is going upward, the market can continue going upward till further notice without even having a sign of reversal. We also have GBP JPY went from 180 straight up to 200 before it started reversing. Now, during that process, a lot of you traders actually try shorting it, including myself. Years back, I also tried shorting it as well. But then, that's where I learned my experience. And to talk of this gold on recently, when I was going through the trading view community, I see a lot of traders trying to short the highs. Every day they keep trying and keep failing. Yeah, they keep shorting it. So this one advice I'll give to you as a trader is simply don't go against the trend. If the market is on an uptrend on a higher time frame, which also appears to be same on the lower time frame, then simply look for a buying opportunity on a pullback rather than looking for sales. And if the market is a downtrend on the higher time frame and is also reflecting similar on a lower time frame, then you should be more focused on taking a sell instead of trying to go against the market direction, because you can never tell where exactly the market wants to end before it to reverse to the other direction. Now, this is simply the dumbest idea number 2 that a lot of you traders have in mind, is simply look for the highs, short the highs, or buy the dips. Mostly for those of you who do crypto trading, you keep having the idea of buying the dips. Now, let me tell you, this only works on things like Ethereum and BTC. You can buy those dips. This one, when we talk about buying the dips, you are not buying the part, you are not entering a featured position, but you are simply buying it on the spot market and then storing it. That is different from actually trading it in real time. So the idea of buying the dip, if you are in crypto space, you can buy when the coin is really cheap. Like when BTC came down to about 50 something thousand, 40 something thousand, a lot of us bought a lot of BTC and stock. Why? Because we know that what over the time it will actually go up again. Now, when you buy BTC and stock in your wallet, you bought assets. You did not enter a trade like we will do. Like if you are trading the featured market, you basically enter the featured market as a buy, and then if it goes against you, it will liquidate you, right? But when it comes over to the spot buying the dip method, that one doesn't get you liquidated. Then when you buy coin, you have that value of the coin. So whenever the value of that coin goes higher, your profit will come back, unlike when you are trading the featured market. So when I say stop buying the dip, I'm not referring to buying it in a spot market. I'm referring to buying it in the featured market. Now, that is simply the dumbest idea number 2 that a lot of you traders have that's actually killing you. Simply trying to challenge the market direction. Now, the dumbest idea number 3 is simply overanalyzing the market. Like a lot of you traders, you learn a very profitable trading strategy. You backtest it repeatedly, get decent amount of result. Whosoever taught you showed you decent amount of result that he or she is getting. Like on this channel, I'm trading liquidity, supply, and demand system, and I've shown so many results from it, from my backtesting data, from my demo trading, from my live trading. I've gotten a decent result from it before I started teaching it on this channel, and you guys see the result whenever I'm doing a video that has to do with that particular channel, with that particular strategy. So now, when I'm trading my strategy, I simply have a rule that I follow. Once I follow this rule and I know that my setup, everything abide by my trading rules, I don't overanalyze the market again. Like I basically don't look at the market again. I just let it go. But a lot of you traders, you keep failing this thing. You analyze the market, see that what you have a buy entry, and then a few minutes later you come and pick up your chart again, analyze it again, you see that you are now seeing a selling opportunity. Then you go in on a sell, or to end up in the red zone to come and see the market sweep out your stop loss and then go back to where you wanted to whether buy from earlier on. Then you start buying again. Now, this one big mistake a lot of you traders keep making. Stop over analyzing the market. Once you do your first setup, you see that the setup abide by your trading rules. Take that trade, hold on to it. If the market is not at your point of interest yet, leave the chart alone and then go away. Just let it be there. So stop trying to over analyze the market, because when you analyze the market too much, you see different opportunities that are not even needed. That's why if you follow, when I'm doing my live streaming, I don't analyze one market more than once, and I don't look for different points of interest in the market. I just look at the current market position. If it's a downtrend, I put my whole interest in selling. If it's an uptrend, I put my whole interest in buying on the pullback. So this is basically what you also need to do as a trader out there. Simply, once you have a strategy in place, once you've backtested that strategy, once you analyze your market, don't analyze that particular market again until probably maybe the market has gone fast. So probably you identified a supply level earlier on. Now the market has broken your supply level. So maybe you can say, okay, there has been a shift in market interest. So maybe now you can reanalyze for a buy. But in a situation whereby you identify a supply level, the market is not at the supply level yet, and then the market hasn't even gone far away from the point whereby you did your initial analysis. Then you come back to analyze again, see, what if I buy this market? And then all you end up doing is that end up seeing this market going against your trade and then making you take unnecessary losses. So that's simply it about the point number 3 I have here. Simply stop stressing yourself with over analyzing the market. Have a strategy, follow the strategy rules, and then let it run on. Now, this is simply the third one on our list. Now, the fourth dumbest thing a lot of you traders do is simply trying to stress out yourself growing smaller accounts. Now, I know personally when I started off at first, I also started growing smaller accounts. But over the years, I see that was one of the dumbest things I ever did. Because if I have interest that I can actually grow $100 account to any amount I want, why don't I just take up a challenge? So if you're a trader out there, instead of going to deposit that $100 into a trading account and then start trading it, I would advise to use at least $50 to go buy a 5K prop firm account or less. So I'm currently giving you a 25% discount code that you can use. That code will be down in the video description. It might also be on the screen as well. So that code will actually give you a 25% discount on Blueberry Funded, whatever package you are going to buy. So now, instead of stressing yourself trying to grow that $100 account, I will advise you to patiently use that money to buy a prop firm account. And because if you are going to trade a $100 account, it basically means that you already have a strategy that you know that will actually work. So if you have a strategy that will work, instead of stressing yourself growing a $100 account, why don't you probably use that $100 to buy a 25K account, or basically use it to buy a 5K or 10K account that will cost you about $60 or less, and then take up the challenge. Once you pass the challenge, you go from stressing yourself over a $100 account to probably handling something of $1,000 and more just by passing that challenge, which will give you more chance, more room to take more risk and then make more profit in return. So now let me say you deposit that your initial $100 into your prop firm account. Now at the end of the month, let's say realistically, every trader, a good trader will look at making 10%, 5 to 10% of their account in a month. So now let me say realistically, you're able to make 10% of your $100. That is just $10. But if you should use that money to buy probably a 25K account, and then at the end of the month, you make 10% of the account, that's $2,500. So it's basically on a different scale. So then one of the dumbest ideas ever you can stress yourself over as a trader is simply trying to grow a smaller account. Our advice is to go buy a prop firm and then take up that prop firm challenge. Now, if you're a trader out there who don't have a strategy yet and you're looking for a strategy to trade, you don't have to stress yourself. I'll be tagging a full playlist down here, the SMC concept playlist. Now, basically, I don't know if my strategy is SMC, but it's basically have some SMC terms that I use. So I group it into an SMC playlist where I talk about liquidity, supply and demand, and then so basically I don't trade other blocks, I don't trade fair value gaps when it comes to trading SMC. So I basically trade supply and demand alone with a touch of liquidity. So I've created a full playlist that contains the whole of that strategy. So you can go watch that video and then backtest the strategy. I always tell you, despite me backtesting and showing you my results, it doesn't mean you should also just take up the strategy and start implementing it. Also backtest it, because the way you react when you take your trade is totally different from the way I react when I take my trade, because we have two different emotional levels. Like for me, my emotional level is currently down at, I don't even know how many percent, because as we are speaking right now, I have a trade running, but I don't even care about the trade. As we are speaking right now, I have a trade running over here on one of my firms. Yeah, so I'm trading it on the firm. You can see the trade is currently running at loss. So it basically have to be so like just learn the strategy, put it into practice. When you get it, when you get your results, and then you can take it to the live account and then start trading as well. Strategy is very important when it comes to trading. So this already said, have a lovely day. See you in my next video. Bye.